Arjun, thanks for joining us here today. Myself, Austin Carroll, and Taylor Steele on the Integrated-Equities team. And we're joined with Arjun Saroff with NewHaven Mortgage Fund. And NewHaven is a mortgage investment fund that operates here in Ontario. And Arjun's going to share a little bit with us what the fund does. So, Arjun, thank you for joining us both today.
Pleasure to be here.
See ya.
Great to talk to you.
Yeah. Thank you. So tell us a little bit about who is NewHaven and what do you guys do?
So NewHaven is a mortgage investment corporation. It started around 2008, and it focuses on lending in residential real estate, mortgage loans across Ontario, first and seconds. And what we do primarily is focus on equity of a property. We want to view ourselves as a stepping stone for borrowers to make it from kind of borrowing with us to the trust companies and then eventually to the promised land with banks. So we view ourselves as part of the solution for somebody who's trying to build themselves up in Ontario, whether it be credit-wise, whether rehabilitating themselves, or however they may look at it.
Great. And so it sounds like NewHaven is a lender, and so from our focus of working with investors can invest inside of NewHaven, which you're investing then across a diversified portfolio of different mortgages. You mentioned here in Ontario, is that the only market that you guys invest in? And then mortgages, are you investing in first mortgages, second mortgages? What does that look like?
So yeah, currently we are only in Ontario. We did try and go out into Nova Scotia and a couple of other markets, but we felt just from an expertise standpoint and what we know, there's nothing like your own backyard. And you know the areas, you know each aspect of it. When you're talking to Peter, he mentioned certain areas in Toronto that kind of retain their value, and certain areas in Toronto that may not be as nice or may not be places that you want to invest in. So from our standpoint, understanding not just the GTA market, but also across Ontario, markets like Ottawa, all the way out to Kitchener, Waterloo, or Windsor. We feel that we know those best, and that's what we stick to. And investors will get our expertise, across many years of doing this. And that's what they're investing in. And they have an opportunity to diversify themselves across a 500 mortgage portfolio, and it gives them access to both first and second mortgages that, our returns are, we have two different share classes. So an investor can invest in our 5.5% share class to 6%, which is our MIC-O. The difference between the two share classes is our loan to value. So in MIC-O, we only go up to 55% loan to value. So it's considered a more conservative option for investors. And we started that back in 2020 in November. And we've had our MIC-AC share class since 2008. It was the initial share class that we introduced. It was A, and then we added the C, and they both have the same characteristics. We also had a B share class, but we acquired a fund, and it dripped into the MIC-AC. So essentially, when investors invest with us, they'll either go into the AC or the O currently. And AC goes up to 80%, Austin Carroll. And we enjoy looking at the mortgage loans across Ontario that we know and we understand, and investors get that access to that if they have the appetite for it.
So as an investor, what does it look like when I come to you and say, hey, Arjun, I have some money and I'd like to invest into NewHaven? Just tell us a little bit about what exactly are they investing into? I know it's diversified across mortgages. Just say a little bit about how that operates.
So essentially they buy preferred shares. So under 130.1 in the Tax Act, which I could bore you to sleep with, the MIC takes a specific structure. And there's certain benefits to how preferred shares are treated under 130.1, as in dividends for preferred shares are an expense versus usually how dividends are classified are as equity. So they would purchase these preferred shares, which give them the return profile and access to the portfolio that they're looking at. So, if once you purchase the preferred shares, you get a monthly dividend. You have the option of either reinvesting or taking out the money monthly, however you deem fit. Usually people with registered plans, they like to keep their money in and let it ride. Or if you want the cash flow on a monthly basis, that's an option too.
So we're involved in a lot of the different real estate communities here, RAIN, Keyspire, these different real estate investing groups. And a lot of the investors there are familiar with private lending deals, so private lending investments. Do you want to talk about how investing in a MIC might be different than just doing a singular private lending deal?
Yeah, I mean, for us, it's about the infrastructure and the expertise, right? Anybody can lend on a loan in Ontario. It's possible. You can connect with a lawyer or a broker and lend on individual deals. Now, when deals are going good and the market's escalating, everything's great, there's usually no problem with that. You'll probably get a higher interest rate return. However, to protect your investment, you need a management team and expertise that can actually take control of a situation and make sure that it doesn't turn into something like a loss. As an example, if a borrower stops paying, what are the processes to remedy that? And how do you know that you're in control of that process? And how do you know you're making the right decisions at that time to make sure that your investment is protected? And that's the benefit of investing through a mixed structure, is that you know that we have a team specifically dedicated to the recovery and protection of mortgages, and also a team that's set up to do the underwriting of the mortgages. So, one of our teams pick up a lot on the deal up front, which, as an individual investor, if you don't know what you're looking at, if you don't know the difference between leased land or, a condo, as an example, what the risks are and how the insurance works for those, it's good to have an underwriting team that can lay it all out for you and make the best decision with the funds and make sure that they're put into an investment that not only gives you a good return, but also gives you peace of mind.
And NewHaven's really, made a brand for itself in this mixed space, and maybe talk about the growth of the company. Also, you have quite a impressive track record and consecutive months of paying distributions. Talk about that track record and how the growth of the company's evolved.
So we started in 2008, and we obviously were very small. At that time, we kind of had to put together the structure under 130.1 in the Tax Act specifies that you need a certain amount of shareholders. No shareholders can own more than X percentage. So part of our growth was kind of understanding how we could put that together and getting the investors in line to piece that together. Now, fast forward to 2012, the OSC introduces the exempt market dealer to the space. So we realized that IEI, which you both may be familiar with, had to be set up to essentially distribute the preferred shares of the MIC. So once that process from 2008 to 2013, I would say, was kind of the growth phase. It was kind of just getting familiar with what the industry was and how we could actually make this work. Then from 2013 to about 2020 was a lot of organic growth. So a lot of word of mouth. We grew to about $70-80 million in that time frame. And from 2020 to about 2023 is when we hit our biggest growth spurt, which is when we got the facility with TD for $60 million. And we also got large investments and converted a lot of our individual investors into MIC investors. So at a point in time, the company's focus was really just putting a broker and an investor and a borrower together, right? And just closing that deal with an investor's private funds. We still managed the whole process, but it wasn't within the MIC structure. Fast forward to today, we deal primarily in the MIC structure. So we don't really have individual lenders that we deal with anymore. So for us, that was kind of the evolution of our business to bring us to where we are. We're about $160 million in mortgages under management, and we're looking to continuously grow as well.
It's a cool story. Thanks for sharing.
No
08 picked a good time to get
Picked a
into
good
to the market. Unless you've really been living under a rock, it's no secret that interest rates have been climbing the last 18 months. How has this impacted your guys' business? What's been the bottom line impact on these increased interest rates?
So twofold. I mean, one is obviously the decline in home values, which, for a period of time for the first 6 months of 2022, everybody was giving out mortgages left, right, and center. And, the good thing about kind of how we dealt with it was we said, hold on a second, whenever there's a frenzy, the chances are that something not so good is going to follow, right? And that's how we felt when we were looking at early 2022. So we pulled back, we stopped doing second mortgages, we controlled our LTVs, we tightened up our underwriting guidelines. So from our perspective, the biggest push was really on us not taking the same amount of risk that we had taken prior, just simply because we foresaw that there were going to be issues that were coming up. We didn't exactly predict that the interest rates would go up as high as they would, but I don't think anyone could have done that, right? But there was definitely something coming down the pipe. The second part to that is just the cost of our debt. One of the things that we felt was we used the LOC to supplement the investor's yield. And what happened with the increase in interest rates was we weren't able to obviously supplement it as much. So, we had to adjust our strategy to kind of account for those two things. And, now fast forward to today, we found that, there's been kind of a bottoming out of the market, so to speak. The interest rates may go up a quarter point, depending on how they deal with inflation. But from a real estate perspective, we're seeing bidding wars coming back. We're seeing more activity. We're seeing growth back in the market as people are adjusting to the new normal. So we're excited to see how we can adjust our strategy going forward, which we are going to reintroduce our seconds. We are going to look at different ways to maximize our returns while still maintaining our risk profile in a reasonable manner.
And when looking at any investment, it's very important for people to understand the risks as well as the potential returns. When looking at the MIC and NewHaven in specific, where does a mortgage investment corporation or a fund like this rank in the risk category, and what is the targeted annual return with your fund?
So from a risk category, the OSC looks at us as a medium-high risk. So when discussing with investors, it's always safe to say that that is where our area is. We feel we're more of a medium risk, but we'll go with the OSC's classification on that. Now, in terms of our targeted yield, we look at 8% for MIC AC and 6% for our MIC O, our more conservative share class. When we look at the risk factors, you look at liquidity, right? One thing you need to consider when making an investment is it takes 4 months to withdraw your funds. So, people should factor that into the equation. When you're looking at the real estate market, understand what types of mortgages that we lend on. Residential, we're 98% residential, right? We do very small commercial, and additionally understanding what our management fee is. Our management fee is 1.5%. But the returns that I've told you are net of that management fee. So, from an investor standpoint, it's important to understand each of those aspects and then make the right decision to invest if it's suitable.
So walk us through the typical investment process. What does it look like for an investor? How long are they expected to be in this investment, and what type of distribution frequency can they expect?
So investors can invest through registered plans, an RSP or TFSA through Olympia, or they could invest through a corporation or individually. As soon as the funds hit our account from either Olympia once the process is complete, or through their own bank accounts when they invest, that day forward is when interest is earned. Investments are paid monthly, So their dividends are monthly and they're paid on the 15th of the preceding month. So for the month of May, you'll get your distribution on June 15th. And depending on if you, participate in the DRIP program or, we're paying your account, we EFT directly on the 15th, the day that we announce the distribution. Now, in terms of what they can expect, we don't have any penalties for withdrawing. Relatively compared to other products in the exempt market, we are relatively liquid, but then again, you have to still wait the 4 months to withdraw. And your interest is taxed on is treated as interest income on a T5, unless obviously you're investing through a registered plan.
So this investment is a passive, hands-off investment. You'll obviously be receiving your monthly distributions from the capital you have invested. What type of reporting does NewHaven provide to clients on the performance of the fund?
So we send, with our monthly distribution, we send a newsletter. We've enhanced the newsletter recently, so it contains key facts about the fund. We also talk about arrears. We address arrears on the newsletter. So everyone has access to that reporting in a summary format. Additionally, we send monthly the investor statements, which pertain to the specific investor. Annually, we do send an annual investor report. We also send out our audited financial statements. We're audited by KPMG. And we also quarterly will send newsletters out. Additionally, we have board meetings. So we have a board of five people, comprised 2 of management, myself and Jason Viner, and 3 independent individuals who are investors, Anthony Borg, David Goldman, and Stephen Dinley. And post our quarterly meetings, we generally send out a newsletter to update people on kind of the operations of the fund and what we're focused on.
Yeah, seeing the internal updates circulated around on NewHaven and the detailed updates that you guys provide on the breakdown of the mortgages, the loan to value, even discussion if there's a potential property in arrears. And so I think the update for passive investors participating is quite in depth. And I think that's one thing that's very important for these private equity investments is making sure that the clients kept up to date and receiving good email updates. So I believe NewHaven does a great job at that.
Yeah, absolutely. One of our focuses is really just kind of being as transparent as possible. So people understand that, yes, there are arrears on the book. It's a risk to any investment. But the fact is you're diversified over 510 loans. Having a small portion of those in arrears is not going to have a material impact on the overall operation of the fund.
Mm-hmm. And you talked about the fund over 550 mortgages. What are you excited about here heading into the second half of 2023? What does the outlook for the MIC look like for the rest of the year and into the next year?
So, it's kind of tied into the interest rate environment. We're excited that we're anticipating that by the end of 2024, interest rates will decline a bit. So the Bank of Canada hopefully will get it together and help everybody in this industry. And we're seeing a lot of activity in the market, encouraging signs, and that's something that we talked about a lot was kind of the 3 months from March to May being a critical period in the industry in terms of kind of sorting out all the mortgages that were done at the peak of the market in 2022. So for us looking forward, we're very excited about the path forward. We're going to focus on a strategy of capital raising and also continuously looking for the best deals possible to maximize return and manage risk.
Awesome. Well, it's been a great conversation with you today. I appreciate the insights on NewHaven. It's been a pleasure working with you and helping our clients invest into this fund. So thanks for joining us here today.
Appreciate it. Great talking to you both.
Good chatting with you. Thanks a lot.